This presentation is for Chapter 2, Job Order Costing. In Learning Objective 3, we are going to learn how to record actual and allocated overhead costs in a job order costing system. So now we're going to talk about how overhead costs flow through the job order system. We had already seen in the previous learning objective how overhead costs for indirect materials and indirect labor are applied to manufacturing overhead. But now we are going to look at other items that would also be included as part of manufacturing overhead, such as depreciation on the manufacturing plant and equipment, plant utilities, plant insurance, and plant property taxes. As all of these costs are being incurred, they would all be debited to the manufacturing overhead account. So as we can see on this slide, we can see the journal entry to record the depreciation for the plant equipment. We can see the accumulation of the utilities, the plant insurance, and the plant property tax. So instead of debiting the actual expense accounts as we would do with period costs, we are debiting manufacturing overhead for all of these product costs. So as we go through the year, all of these costs are going to be accumulated as debits in the manufacturing overhead account, and as we can see, so far they have accumulated $83,000 in the account. Now we're going to learn how we are going to allocate these costs to the individual jobs. So if we knew the actual manufacturing overhead cost at the beginning of the period, then we would just apply those, but we don't. So we have to use an estimate of what we believe the overhead cost will be for the year, and then we use what we call a predetermined overhead allocation rate to allocate costs to jobs before the actual end of the period. So the calculation or the allocation rate will be calculated taking the total estimated overhead costs for the year, and we would divide that by a total estimated quantity of an overhead allocation base. So what the allocation base is it's just a way that will link or connect the usage of these costs, the overhead costs, in the most practical way to the individual job. So normally your overhead allocation base should be the primary cost driver that would cause an increase or a decrease in the cost. So the common manufacturing overhead allocation cost drivers are in labor intensive production environments, either direct labor hours or direct labor costs. And when there is machine intensive production, normally you will use machine hours. So again, these are going to be the amounts that are going to be estimated in the bottom or the denominator of that predetermined overhead allocation rate. So now let's look at Smart Touch Learning. Let's say that at the end of 2025, Smart Touch Learning estimated their total overhead cost for 2026 would be $68,000, and that their direct labor costs would total $170,000. They believe that direct labor costs are their primary cost driver. So if they use those as their allocation base, then we can calculate what the predetermined overhead allocation rate would be by dividing the estimated overhead cost of $68,000 by the estimated total direct labor cost of $170,000. So our overhead allocation rate will be 40% of the direct labor cost. So how do you actually do this? So as jobs are completed, Smart Touch Learning will allocate their overhead costs to the individual jobs using that predetermined overhead allocation rate. So let's say that the total direct labor cost for job 27 is $1,250. Since that predetermined overhead allocation rate is 40% of direct labor costs, we would multiply 40% by the $1,250, and we would apply to job 27 $500 of manufacturing overhead. Now, if we added up all of the direct materials, direct labor, and manufacturing overhead for job 27, we would get $4,500. And if we produce 15 tablets, that would give us a unit product cost for each tablet of $300. And when we look at the completed job cost record for job 27, we can see now that all of the direct materials and all of the direct labor and the manufacturing overhead have all been entered on the job cost record. We add up all of those amounts and we get a total for the job of $4,500. And again, if we divide that by the 15 tablets that were produced as part of this job for the Central College Bookstore, we can determine what the unit cost would be of $300 per tablet. Next, we would need to make a journal entry for the period showing the allocation of the overhead to all of the jobs. So this again is a summary entry. So if we had $67,600 in manufacturing overhead allocated to all of our jobs, then we would debit work in process inventory for that amount, and we would credit manufacturing overhead for the same amount. So when we look at our T accounts at the bottom, we see that in manufacturing overhead we have that credit for $67,600, and that is now going to be debited or included in work in process inventory. We also see in this slide that we still have a balance in manufacturing overhead of $15,400, and we will learn in a future learning objective what do we do with that balance at the end of the period, because manufacturing overhead does need to be zeroed out as a temporary account at the end of the period. And that is the conclusion of the demonstration for learning objective 3.